All right, we are in the first week of July, and I'm coming at you again with another variable rate update on where variable rates are at and interest rates in general. So, look, the first thing we want to address today is the idea that we get sometimes, hey, that I would have saved money on a fixed rate over a variable rate. Um, a lot of brokers these days are like, well, we can't look at the past, and that's true. Like, we make decisions based on the information available to us at the time, and hey, but here's the important thing: if I took a variable rate at any point over the last several years, as of this moment, I remain to have saved more interest on that variable rate than I did on the fixed rate. And you can say, well, that's going to change soon. That may be the case. But as of today, I have saved more money on the variable rate over the fixed rate. There may be some inevitable things. We know that rates are going to change in a meaningful fashion in the middle of July here in a very short amount of time. We know that's already priced into the market. But as of today, you have saved more money on taking the variable over taking a fixed rate. And that is not a matter of opinion. That is a statement of fact at this very moment. And so that's not to say, hey, look, Joel, you recommended a variable, I was your client, and so you're just trying to, double down on that or something. That is just important to know. As of right now, that is your situation. So want to, the other thing I really want to drill into today is the idea, a lot of people talk about, should I lock in? How do I get my rate lower? Look, as of this moment, rates are higher. Rates are higher on variables, rates are higher on fixed rates. Rates in the market are higher. And so it's about mitigating the higher rate, irregardless of product or strategy. And so that is something very important we have to be aware of right now, is that it's not about, I get a lot of questions on how do I get my rate lowered? You had rates in the 1%, and there is a reality that you just have to be aware that there is, rates are higher. And so look, strategy one here. We've talked about a lot of different strategies, and if you want to move to a fixed payment variable or anything like that, you need to do that right away, because the moment your rate goes up or prime goes up, you're stuck at whatever that rate is as of today. You don't get to, so that's important. So you want to do something sooner than later. I'm going to talk about a number of different ways that this is like in general. If I believe rates are up, I'm very worried about the idea that somebody says to me, and this happens to me quite a lot, and I'm very worried about people that call and go, if rates go up, I cannot afford the rate payment to go up. Now, we run the numbers and find that it would be fine, but still, I'm very worried about this train of thinking, because rates are up across the board. Now, if I took a fixed rate, 2 years ago, or I took a variable 2 years ago, or I took a fixed rate, in these 4 years ago. Like, remember, there is a reckoning always coming. Rates renew it for the most part at 5 years, and so at 5 years I'm subject to the market's rate. So if I took a fixed rate, I may have fixed it in for a certain portion of time, as I do with a variable for that matter, but eventually I have higher rates. So I don't escape higher rates by locking in. In fact, quite the contrary, eventually that day of reckoning comes and I have to move to higher rates. So first train of thinking here is that if I did a video last week that I think, we're 12 to 18 months. If I believe that we're going to a recession in 12 to 18 months, the greatest tool in a recession is for them to lower rates, then I'm not worried. I stick the variable and I don't lock in or do anything like that, because rates going to be lower 12 to 18 months. I just got to white knuckle it until that time. If I have a situation where I do not think rates are going back down, historically they were low for too long and now we're back to normalized interest rates, then I also realize that at some point that day of reckoning is coming, 2 to 3 years down the road, and I have to get used to higher rates. So that is, I have to, one or two things I have to plan. if I'm of the camp where I think that the government is both intentionally raising rates to affect the middle class, or they're incompetently have very little strategy, remember that the higher elites or very wealthy people are highly benefited not from higher rates, but from lower rates, which enable them to engage in more expansion of the money supply and stack wealth. So remember that as well. And also remember that most banks are pushing people to lock in. And so if you believe that they don't have your best interest in mind, that is their strategy right now, for people to lock in and to pay more money on the long term and the short term. So that is where things sit from that perspective. But the time is to get comfortable, like either short term or long term. You have to be comfortable with the higher rate. It's irregardless. Now you say, well, I'm just upset because I could have taken a fixed rate 4 years down the road. Eventually you will have that. If you believe rates are going to be higher for that portion of time, you're going to have that higher rate. If you think rates are high for a short term, you're better to have stuck on the variable than got stuck on a fixed rate, and it truly is stuck on a fixed rate. If I have a situation where the economy seems shaky, I definitely don't want to be locking up my mortgage, because now I'm restricted from being able to sell, or refinance, clean up my debt, all those types of things. So, definitely that remains the situation. If I was asked today, would you recommend a client taking a variable last year? Yes, I would have. I think we would have emphasized more the flexibility over penalty. But yes, we would have. Would you have recommended a client take a variable in February? Yes, we would have. Would you recommend claiming a client today a variable? Yes, we would have. In all scenarios, we would have recommended a variable. Now, I think we would have emphasized different features, like I said, at different points, but nonetheless, that would have remained and has always remained the strategy. Do I have any fixed rate mortgages? No, I have all variable rate mortgages. So all with adjustable payments where the payment goes up as prime goes up. So, there's a lot more to cover, but this is the message today. Rates are higher in the short term, irregardless, and we need to prepare and work around that. Now, we're going to be doing a few videos on how I can, if I'm worried about my income, what are some ways I can make extra money off of my house and things like that. Watch for those types of things, because this could be the strategy. Because the truth is, you're not feeling pressure as much from your mortgage. You're feeling pressure from inflation. Inflation is what's causing everything to go up. And so I know it's a little bit of a long video, but last part of the puzzle, what's going to stop rates going up? The ideal inflation rate is 2%. We're running much higher than that right now. But what's going to cause inflation to change? It means that the cost of goods and the cost of prices has to go down. That's happened for housing. So I think that's inevitable that in a short period of time that inflation will come down, because we don't see house prices continuing to go up, and that's been the story for a few months now as the market has started to stall. Now, how do we stop the cost of goods going up? Well, there's some bigger problems with that, and some things that probably don't relate to price control, but also we're coming off people having massive amounts of savings, and they're ingesting a lot of money into the economy as far as vacations and going out and buying consumer goods. They haven't to for a short amount of time. That is a time frame stop as well. If we get through the summer and we're still running high inflation, I think that becomes a different story. But anyway, that's a few thoughts this week on the variable rate. If you have a situation you want to run through, if we haven't run through your variable rate, we haven't done the 7% test, we haven't done the lock-in test, all these things, get a hold of me. Let's chat. If you haven't redone all your debt to put into your mortgage, let's talk about that. Another thing that people don't ask me about, the most effective product by a variable rate is your line of credit. So if you have a balance on your line of credit, that needs to go into your mortgage today. So get a hold of me. If you know a friend that would help, that this would be helpful for, please subscribe to this video and share this video with them. Have a great day.